Gold prices have soared due to a confluence of global geopolitical and economic uncertainties, which drive demand for the metal as a reliable safe haven. The surge is primarily fueled by four major factors: fear, central bank buying, inflation concerns, and expectations about interest rates. Global uncertainty, the safe haven appeal. Gold shines brightest when the world feels unstable. Ongoing geopolitical conflicts, such as wars and trade disputes, and economic instability, fears of recessions or bank failures, erode investor confidence in traditional assets like stocks and bonds. When trust in paper assets declines, investors rush to gold, a physical asset that has maintained value across centuries, to protect their wealth. This massive influx of capital into gold creates upward pressure on its price. Central bank demand and de-dollarization. A historically significant driver is the relentless buying spree by global central banks. Institutions, particularly in emerging markets, have been adding vast amounts of gold to their reserves at near record pace. This is largely a strategic move to diversify away from the US dollar, a phenomenon often termed de-dollarization. Geopolitical tensions have made nations wary of holding too many reserves in a currency that could be subject to sanctions or political risks. By buying large volumes of gold, central banks reduce the open market supply, thereby supporting higher prices. Monetary policy and economic factors. Monetary policy signals also play a critical role. Interest rate expectations. Gold, which pays no interest, becomes more attractive when central banks are expected to cut interest rates. Lower rates decrease the returns on competing assets like bonds and savings accounts, making non-yielding gold a more favorable investment. Inflation hedge. Persistent inflation reduces the purchasing power of paper currency. Investors use gold to hedge against this loss, viewing it as a tangible store of value that preserves wealth over the long term. US dollar weakness. Since gold is globally priced in US dollars, when the dollar's value weakens against other currencies, gold effectively becomes cheaper for international buyers, boosting demand and pushing up the price. In essence, the high price reflects a collective global anxiety about the future, with institutional and retail money seeking the security of gold amidst market volatility, geopolitical risks, and shifting economic policies.